Hey everyone, welcome back. You're tuned in to another deep dive explainer. Today, we're unpacking some seriously vital shifts and future trends from the latest Polymer Bazaar weekly report on EVA, that's ethylene vinyl acetate for the third week of July 2026. If you've been watching the charts this week, well, you already know it's a bit of a roller coaster out there. So we really need to break down exactly what these massive movements mean for your inventory strategies going forward. Let's get right into it.
Our roadmap today comes straight from Polymer Bazaar. They're a premier corporate news desk, and our whole goal with this explainer is to take their raw data and transform it into clear, totally actionable market intelligence. We are definitely not just reading numbers off a spreadsheet today. We're mapping out the actual, real-world purchasing strategies you need to stay profitable in what's becoming a wildly shifting polymer market.
So, here is our game plan for today. First, we'll look at global EVA market shifts. Second, instant AI chatbot updates. Third, we'll cover Indian bazaar currency dynamics. Fourth, geopolitical crude oil impacts. And lastly, we'll wrap up with the official EVA purchase recommendation. All right, kicking things off with Section 1, Global EVA Market Shifts. Starting our global tour over in China, the market is basically stuck in a rut of dull demand. It's actually pretty fascinating because buyers are locked in this strict wait-and-watch holding pattern. Even though there are literal shortages of certain specific EVA grades over there right now, buyers are just holding back. Enquiries are super low. And because of this massive standoff, spot prices have completely flatlined, sitting totally static at 10,300 Chinese renminbi per metric ton. It's a classic stalemate, really. But moving west, wow, we see a massive divergence. Over in the US, buying hasn't really picked up much strength, mostly because it's being weighed down by those declining prices across Asia. But the key here is that prices are rock solid. FAS, free alongside ship in Houston, is holding perfectly stable at $1,240 per metric ton. But jump over to Europe and it's a totally different story. Domestic prices have absolutely crashed on a free delivered Northwest Europe basis, all because a flood of cheaper export offers just rushed into the market. To really wrap your head around how severe that European crash is, just look at the raw numbers. We're not talking about a little dip here. Low-grade EVA has plummeted by a massive 365 euros, dragging it all the way down to 1,590 euros per metric ton. Medium grade? It's not faring much better, tumbling 360 euros to land at 1,740. And even high-grade EVA hasn't escaped the bloodbath, falling 255 euros down to 1,990. When you see prices dropping this sharply, it really makes that stability over in the US market look even more incredible, right? Moving right along to Section 2, Instant AI Chatbot Updates. Now, as we all know, speed is literally everything in procurement. You can actually grab this data instantly now. Just open up WhatsApp, send the letters PVC to +91 93746 24365, and boom, you get a full AI-powered market report with weekly trends sent straight to your phone in about 5 seconds. I mean, that's faster than it takes to take a sip of your morning coffee. The big takeaway here is that you don't have to wait around for data anymore. You can pull it on demand the exact second you sit down at the negotiating table. Okay, zooming back in, here's Section 3, Indian bazaar currency dynamics. Let's bring it closer to home and break down what's happening right now in the domestic Indian bazaar. When we look at spot imported grades, and this is excluding GST by the way, Mundra is assessing EVA between 137 and 140 rupees per kilo. Meanwhile, up in Delhi, those assessments are sitting just a bit higher, floating in the 140 to 145 rupees per kilo range. This gives us a really solid baseline for where domestic trading is anchoring at this exact moment. Now, if we factor in the official valuations, the Indian Customs Department is showing total stability. These rates haven't budged an inch since July 14th. The import valuation is holding steady at 95 rupees and 20 paisa, while the export valuation is sitting tight at 93 rupees and 50 paisa. On paper, it looks like a calm, totally manageable environment for importers, doesn't it? Well, beneath that calm surface, there is a massive disruption brewing. Here is the real issue. The US dollar is strengthening even further, and it just blew past a critical threshold, 97 rupees. Wow. Even with those steady customs valuations we just talked about, crossing that 97 mark puts severe immediate pressure on the actual out-of-pocket cost of importing materials. This currency squeeze is absolutely the first major hurdle hitting the domestic market right now. Which leads us perfectly into Section 4, Geopolitical Crude Oil Impacts. So, with all these crazy moving parts, the European price crash, the tightening currency exchange, that global sluggishness we started with, What is the buying pulse amid all this uncertainty? How are industrial processors actually reacting on the ground to these mounting currency and geopolitical pressures? Are they retreating into a wait-and-watch mode like those buyers over in China? Actually, the reaction is being driven by a very specific domino effect. You see, the recent U.S. strike on Iran has triggered an immediate spike in crude oil prices. And you know how this goes. When crude spikes, global feedstock prices shoot up right along with it. That suddenly makes overseas offers significantly costlier, which ultimately forces domestic retailers to quote higher prices just to survive. It's a textbook economic chain reaction, plain and simple. And that brings us to our final stop, Section 5, Official EVA Purchase Recommendation. Returning to that buying pulse, here's the surprise. Despite the heavy uncertainty dominating the bazaar, buying interest is actually highly positive right now. Processors are absolutely not sitting on the sidelines. Instead, they're actively, aggressively building up their inventories right this minute in anticipation of those upcoming price hikes. They see that crude surge happening, and they know, without a doubt, that an upward correction for domestic EVA is coming in the very near term. Which brings us to Polymer Bazaar's official and frankly urgent recommendation: buy at the current prices before the market moves up. Because of that crude-driven chain reaction we just walked through, it's pretty much inevitable that overseas offers are going to become substantially costlier. The window to secure your materials at these current rates, it is closing fast, folks. As we wrap up our analysis today, it leaves us with one major puzzle to solve. How will ongoing geopolitical volatility continue to shape the future of engineering polymers? As procurement officers and market watchers, we are facing this challenge every single week. The crude market shifts at lightning speed, and whatever happens geopolitically instantly ripples down to the exact rupee you're paying per kilo in Delhi or Mundra. It's all connected. Thank you so much for joining me for this explainer. If you want to dive deeper into the raw numbers we covered today, you can download the full detailed PDF report directly over at polymerbazaar.com. Or just give the team a call at +91 93754 24365. Keep leveraging this data to make smart, profitable decisions. And hey, make sure to subscribe so you don't miss our next informative explainer update on commodity and engineering polymers. See you next time.